So the government's out of shutdown. We might have a 50-year mortgage, and conventional loans now do not have a 620 minimum credit score. This should be fantastic news for homeowners and home buyers. But the big news is what's going to happen with these and why? So, folks, my name is Dan Frio. I come in each day to explain to you guys what the heck's going on with these. But today I have some breaking news. The Trump administration, they announced possibly a 50-year mortgage coming down the pike. And then we also have the administration saying there's no more minimum credit scores. So we're going to try to take all this data and the government coming out of shutdown and figure out what the heck's going to go on with those and why? So let's break out today's news. So here's right through here. The Trump administration last weekend came out with this idea. Wonder if we could go with a 50-year mortgage. If you really want to see what experts think about this, especially me, check out my video when I was live yesterday on News Nation. I'll put that video right up through there. They reached out to me and they said, Dan, you're a mortgage expert. What do you think about this 50-year mortgage? Is it a trap? Or is it actually a way to get people into home ownership? You might be surprised at my answer up through there. So check out that video. But more announcements today was this. Fannie Mae now is removing the minimum credit scores. How can that help you? Well, if you're a homeowner or home buyer, now, let me give you some advice. My name is Dan Frio. Like I said, I'm actually a mortgage loan officer. I've been doing this for over 35 years. If you need some help with any of this, especially if you're a homeowner right now, check out my website. Because if you're a homeowner and you keep trying to refinance or thinking about, does this even make sense? Well, check out my RateWatch tool right up there. It's RateWatch 2.0. Basically, what you're going to do is fill out some information. Let me know what rate you want to be contacted. When rates hit there, I'll reach out to you. We don't sell the data. It's either going to be me, Tony, or Anthony. We're going to call you up and say, okay, here's what your new payment's going to be. Here's your costs. Here's what your break even is. And if you want to do it, we'll get the paperwork started and get you locked in. But if you're a homeowner out there, a home buyer, how's all this news really going to affect you? Well, it's not going to affect mortgage rates, and mortgage rates didn't change today because the markets were closed. But what's going to happen now is the government is now going to open up. It doesn't look like we're going to get any data this week, but next week we're going to get a slew of data. The data that's going to come in, I think they're going to force or push this data forward, are things like this. We want to know where inflation is and the jobs reports are. So until we get this number, the markets really don't know where to go. If you go over to the stock market today, look at what it's doing. People are shifting out of that AI trade that they were in for a while, and they're moving money over to the Dow Jones. And I've been saying for the last few months, I'm like, okay, I'm not panicking on all this stuff. And if you're a trader, you might want to take a little bit of profits off the table. Just have some powder on the side to, if the markets readjust, you might be able to jump in and make a little more money. I'm a long-term investor. I buy and I just hold, and it's worked out pretty darn well for me over the years. So here's what we're seeing across the board. I come in each day and say, okay, is this a Cinderella story? What's the market looking like? So we go over the Dow Jones, the S&P and the NASDAQ and the Russell and say, okay, is this a Cinderella story? What I mean by that is if you have money in the market right through here, if you got green across the board, you're making some money. I'm going to say today, even with this red in the NASDAQ, you're making some money. We got the VIX down. This is the anxiety level on Wall Street. Let's go over to cryptocurrency. It's getting clobbered today. But if we go over to oil's up to $61 a barrel. I love it under $65 a barrel. I love it when it gets closer and closer to 60 because this helps the inflation numbers. Now, here's the concern that we have. When the numbers start coming in, such as these, what are they going to come in at? So here's what the debacle is right now. What's inflation going to look like? And what's the initial jobless claims look like? Well, the markets are anticipating this. I just read a huge article and tried to summarize it, but it's saying this. It's saying jobs are slow. We know they're slow, but they're not falling off a cliff. GDP just came out. Looks like Q4 is at 4%. That puts us for the year up about 2% on the GDP. But we still have that tariff threat behind us. Is it going to be legal or not legal? And how high is it going to push up the inflation? It's keeping it above where the Federal Reserve wants it right now, but they're like, okay, we're kind of giving up on that. We know that tariffs, they're going to create a little more inflation than we really want. There'll be a one-off, and then once everything gets adjusted a year from now, we're hoping to be at the 2% trigger that we want to be. But now they're saying, okay, what's the job market going to look like? And that's basically everything that's in the air right now. So here's what I would suggest you do. If you're a homeowner right now, please look at the numbers for refinancing. If you're a home buyer, let's get over and give you guys some advice because here's what Wall Street and basically the FOMC is telling us, or the CME. is that's the Chicago Mercantile Exchange. They're saying in 28 days, what's the Federal Reserve going to do? Because this also plays a role in all this. You go down through here, and here's what it looks like. There's a 67% chance they're going to cut rates, because right now we're at 3.75 to 4. So they're saying there's a 67% chance there's going to be a cut. The problem here is this was at 95% just a week ago. So this is really why the markets are doing what they're doing right now. The stocks and bonds were down, not doing too well over the last few weeks, but now the markets are open. They're anticipating this data. And remember, the anticipation is this. They're expecting the jobs market to be slow, nothing to fall off a cliff, and inflation just to be, between here, right where we are now, and 3%. So as long as those numbers come in kind of with what's expected, you're not going to see really many changes over here. But what if it doesn't? So what I'd suggest you do is, if you're a homeowner, get prepared. See if this helps you. Maybe look at the lock in right now. If you're a home buyer, be protected. How do you do that? Well, reach out to us. We'd love to consult you. We'll work over or look at your credit. Look at your budget. How much can you afford? Making sure you can afford that. And then working in, what program do you fit into? Okay, is it best to go with the VA loan? If you're a veteran, check out the videos I've been doing lately. You're going to learn a lot. If you're a civilian, well, there's going to be a whole bunch of products for you too. FHA's 3.5% down. Conventional loans, if you're a first-time home buyer, 3% down. There's a lot of products for you. But how do you move to the next level? Well, what I'd suggest you do is, when you get pre-approved, not pre-qualified, get pre-approved at maybe like 7%. And here's why. If you get approved at 7%, let's say that payment, it might be right in line with what you're wanting. But let's say you end up with a rate at 6.25, maybe 6.5, and that payment's $200-300 less. Now you're probably saying, okay, good for news. But here's what also is going to happen. Your taxes and your insurance might get adjusted next year, pushing that payment up to where you really wanted it to be. So it's always better to get qualified at a higher payment than you really want, because if you can qualify at that, it's going to be much easier to make those payments and qualify at a much lower payment. So if you want to get involved in this to see what you qualify for and how much and which program is best, visit us at therateupdate.com right over here. My name is Dan Frio. I'm the host of this, and I'm actually a federally licensed mortgage loan officer. Folks, I've been doing this for over 35 years. I work at a bank that provides me a licensing throughout the whole country, as well as Puerto Rico. The slogan I created when I joined the bank was, one application, one credit pool. We're going to compare your loan with over 30 different lenders. How do we do that? Well, folks, we're set up with over 30 other lenders. These are banks, credit unions, and mortgage companies. We can use their services. We can use their rates. So when you reach out to us, we're going to get you a quote with over 30 different lenders, and you can work with me, yours truly, during this whole process. So if you want to reach out to us to get some assistance with this, please go to therateupdate.com. Right above my head, you can give us a call. You can ask Dan, yes, right up there. Just click that and ask me any question you want. I'll be replying within 24 hours. Maybe even schedule an appointment. We'd rather you do that than go in and put in your application, because you got some questions for us and we want to learn a little bit more about you. So schedule one of these, and we'd love to talk to you and see if refinancing makes sense, or is buying a home in 2026 in the cards for you. So check out in my videos each day. So if you're looking to buy, refinance, you're a realtor, maybe you're a loan officer, click down over there and subscribe. Every day I post a video, you'll get an alert. Something you want to watch, great. If not, skip by, because there'll be something coming down the pike that I'm sure you're going to be interested in. Thanks for watching, folks. We will be back tomorrow morning at the opening bell to let you know what's going on with these and what in the heck might change those for tomorrow. So join me tomorrow. Otherwise, have a fantastic evening. I'll see you then, folks. Bye-bye.